What's up, guys? Welcome back to yet another video. And I know that I haven't filmed a good video in a big while. By good, I mean the trading wise, because the last video was more so an individual one because it was not for everyone helpful. Since it was only trading view settings and my chart colors. But yeah, in this video, I think I'll cover, in my opinion, a very important topic. And yeah, that topic will be something about how do I gather information? How do you gain data so you can be confident that whenever you're entering the trade, right? You are looking for the correct confluences, and why do you look for the confluences that you are looking for? I hope that makes sense, right? But to put it in different words is obviously how do I backtest? Right. I don't really like the word backtesting because I don't do backtesting, which you will find out in this video. I'm more so a case studies type of guy, and yeah, let's get into this video. Let me. So as you can see, we're now at 4 hours, right? And before we start with case studies, right? The way I'm doing this is by no means um, the way that you should be doing this, like only that way, right? So even though I will showcase how do I do this, right, and I will point out the advantages and disadvantages of either of these methods, right? At the end of the day, it is up to you to decide what method you want to use and why, right? If backtesting the way you do that, right, is it is beneficial for you, right? Then keep doing that, right? If case studies is beneficial for you, keep doing case studies. If none of them are beneficial, then I don't know, do live trading or demo trading or forward trading or something like that. But you need the data to back up your trade ideas, all right? Because like everything is information, and you need to know that information before entering the trade or before even building the story behind the trade you're entering, right? So yeah, so the normal way of doing backtesting, right, is making the chart look like this, right? And then let's say, I don't know, let's go here. Um, let's go here, right? And then, right, you see that you have clear charts, right? You don't have any drawings, and you just start analyzing like you do top-down analysis from your higher time frame to the lower time frame or executional time frame, which is in your case, it may be 15 minutes or 5 minutes or 30 minutes or 1 minute. In my case, it is 5 seconds, right? And here it is the first disadvantage, right? Sorry. The first disadvantage of backtesting is that there is no, um, there is not enough data available for you to backtest it properly. And what I mean by that is that you can actually allow yourself to go back 1 month in time on TradingView, so you can get to your um executional time frame, right? So let's say right now I am in October, right? Today is the 27th January, right? The furthest point I can go to and get on 1 minute time frame is 27th of December, right? So if I go now to 1 minute time frame, right, it will say that the data of this time zone is not available for me right now, right? Because I went too far back than it is available, right? So you, even though you can build a trade idea right now, right? And let's do that right away. Uh, you cannot find the confluences on the 1 minute, right? And here I am to show you. So we have 4 hour time frame, right? We understand that, we have this bullish order flow right now. We have broken this very important, in my opinion, swing point to the downside, and we have something like this, right? So now, as you can see, we have started pulling back to the upside, and we need this for our change of character in order to somehow back our idea of getting a retracement to, I mean, either this supply or this supply, or maybe even this supply, this hidden one in here, right? So after that, after mitigating one of these, right, and mitigating somewhat equilibrium of this lag, right, of I mean this lag, right, we may continue our move towards the downside, right? So now let's go and play the price. So we can delete these and this one. Wait, delete it. So yeah, we delete this one and then we play the price. And then, okay, as you can see, we tap in our badly marked out area, but whatever. We're not here to make it precise enough right now, okay? And since we're trading counter trend, right, we need 15-minute change of character, okay? 15-minute change of character will be if we sweep this low. That was a bad drawing, sorry. This low, because we have already swept the high, right? So you can see that this was the movement of price. Okay, price retraced back to the downside before going to the upside again. So we classify that as um, as the range that was created, and it needs to get violated in order for us to receive our change of character. Right, so we wait for that, and let's play the price for it. And as you can see, we get our change of character, right? And in this situation, we have like as far as as what I can see from here is that we have this as our. Can I go to 10 minutes? Not looking good. Maybe 11, 12, 13 probably. Okay, we have this doji right here. I will take this doji as my extreme supply. And I mean, I don't really know. I mean, this one is as decisional supply, but I think it will fail because we haven't actually created the high, so that will be used as inducement. So yeah, let's now play the price, and as you can see, this decisional, as I've said, it will get violated. So now we wait for the tap in. Okay, we get our tap in, right? And at this point, I want to go to 1 minute time frame, but I have my analysis pretty much done. So the last point of my backtesting session is that I need to go to 1 minute, right? But the furthest point I can do in this case is that I can set the limit order, I mean, the so-called limit order from 50% of the zone, right? With, in this case, it's going to be, let's do it 3 pips. Oh, shit. I'm sorry, wait. Inputs 336, and then the target. We understand that we are now in the pullback phase, right? But since this supply I mean, according to our anticipation, this supply is about to hold, right? That makes our low with these lows as overall, right? They are weak, which is why we anticipate that the price will go as far as these lows are, and that allows us to get into the 1 to 24, almost 1 to 25 RR trade, right? So let's see how it plays out. Okay, we get a great reaction. We test that zone. I mean, test it. It doesn't. It does sound like retail traders, right? But we come back to mitigate that zone sorry, 2 to 3 times, and then we get a great reaction. Let's see what we will then. I mean, of course, we on our way. Um, to the downside, right, or to the upside, right? We of course can be adding the positions. So if I was, of course, trading only 15 minutes, I would be looking at this demand. It got broken, right? Where was the supply that broke this demand? Here, right? So template that was 15 demand. Okay, so this is so we may as well get into the position at once again equilibrium of that supply, right? We have now two pip stop loss, the same target, and that will bring us to 30 RR, right? So yeah, now let's see if we actually are right. So in this case, as you can see, the price has just melted up until this point. Okay, so price has melted, but just for the sake of the video, we're not talking about the trailing stop losses. We just talk about us getting okay. See, the price has just melted, so we have our 30 plus 20, 27, right? 24. So we secured 55 RR trade, right? Using only 15 minutes, right? But the problem is that we could have got a way better RR. Okay, and how could have we done that? Like basically entering from 1 minute, right? Can we do that? Not really. And here am I to show you. So if I go tap and I just tap the button 1 minute, we can see that on the left bottom corner, I have data point unavailable. We don't have historical data to go, I don't know, to go far back that time or whatever, right? So that doesn't allow me to backtest properly, right? Because it just got to the point when I cannot look for my confluences using my executional time frame. Like in your case, it would have been 1 minute. In my case, it would have been 5 seconds. Like 5 seconds were not available too, right? So there is no point wasting the time to backtest, right? Because like then you need to be backtesting only the month that you have and you're currently living right now, right? I mean, you can do that, right? But you as well want to back up your trade ideas using the data that was available to you before this month, right? 1 year ago, 6 months ago, whatever, right? We want to back our ideas like that. Yeah, um, which is why it is for me the biggest disadvantage of backtesting, right? Which is why I do the so-called case studies. So case studies is pretty much an analysis on already printed price action, right? So this is something that I do on my Instagram. Like I post executional time frame analysis with explanations with the help of the callouts, right? So this is me doing the case studies in order for me to see how the price reacts to the zone, what I need to see in order to execute the trade, right? What are the confluences, and what are the similarities, the differences between the reactions inside the zones, and like these all information that you may gather through making case studies may also be helpful for you to find your struggles, problems, right? And then immediately to solve them. All right. You cannot do that from the back testing alone, right? And I hope that I have just showed why you cannot do that, right? Because 1 month of data is not enough, right? But doing these case studies that have happened today for about 3 months, like consistently, right? That will bring you to the point when you automatically know what you need to look for, right? And then you will be way more confident than you were before And then you will get that ease of executing the trades, the ease of finding the trades, right? Because I get the thing that the most people are struggling with, right? The entries, right? But why do the entries fail? Because of the hard time frame idea. Because it's wrong most of the times, right? The structural play is different to what you anticipate, let's say, right? Which is why this case studies thing of doing top-down analysis, and I will show you how to do that right now, or at least how do I do that, right? That will help you to build the idea and to do that all over again every single day while live trading. Okay, so now without more waffling, right? Let's get into the doing case studies. Okay, so so yeah, whole December we've been ranging, right? Um, on the 1st of January, we have finally broke out of the range, and we, as you know, I've already explained this. We have had our break of structure and then a sweep of external range of liquidity, right? And then after that, we had a little retracement, but after that, of course, as you can see, we had buying pressure with uh, impulsive buying candles, right? So this was bullish pressure, right? But I mean, it doesn't mean that from now on we need to go to the moon, right? And as you can see, we have come up into this supply area. This was a 2 day supply area that has actually flipped the demand, right? And this was the catalyst and catalyst for the pullback at first, right? It was seemed to be like a pullback for many of you, and I will now explain why for many of you, right? But using that zone and using this change of character on 15 minutes, you could have as well taken these trades or taken the trade, I don't know, up from here, right, down to the bottom, right? So I have these two trades running, but this is not the point of the video, right? I'm just saying that um, even though we had a bullish break of structure, right? If we were to go on the daily, or in this case, 2 days time frame, right? We would have as well um, gathered a lot of information from that because on the 2 daily time frame, we have actually come into the supply that has flipped demand to the left in here, right? And that has put this low, right? Because on the daily, this is one leg, right? And this was the decisional supply. This was the extreme supply. So we have this high as protected, this low as, I mean, it was weak after this change of character. Okay. So this is why I always say that, doing higher time frame narrative, you need to utilize higher time frames, and those are at least 4 hours. Okay, 4 hours daily, weekly, monthly is maybe too much, but whatever suits you, right? But you cannot. I mean, it is my opinion. All right, I don't see the possible way of utilizing 1 hour in a great way possible, right? Because there is not enough data. I mean, higher time frame data available to you to understand the higher time frame intention and direction it is heading towards, right? For you to be on the right side of the market. All right. It is not enough. Okay. This is so extremely important for you. So please hear me out. Use at least 4 hours. Okay. Um, so yeah, since we have got that out of the way, right? We have come up into these to daily supply, right? In order for us to now give a confirmation to go in short, right? We need to understand who is in control right now at first, and then we need to back our idea of supply getting the control over the demand right now. Okay, so we get our chalk. I will not go to 15 minutes right now, but there is 15-minute chalk in there. We then have this demand, right? That gives reaction within this wicks, but then these wicks are actually hidden supply that take it out. And as you can see, the price has successfully come into that supply to mitigate it and then to continue higher, or lower. We have then a break of structure on 15 minutes, and then supply. Let me do that. A newly created supply has been mitigated once again, right? We then have this very good looking demand, right? Because it has actually flipped the supply that has given reaction within this weeks. And it was the demand that has broken, the next high, the next swing high, right? For then us to consider longs available or valid, we need a 15-minute change of character inside this BOI, right? If we don't get 15-minute change of character or a basic indication of short-term buying pressure getting into the market, right? We don't consider buys at all. Like as simple as that. If you don't get it, you don't even think about buying. Just sell it. All right, because this comes to the point when a lot of people are trying to be the first one in the market to actually catch the reverse. That doesn't work that way. Okay, it is better to be the millionth person to catch the short rather than to be the first person to catch the reversal that will actually fail. You know what I mean? So we get the reaction. I'm pretty sure there was no 15-minute change of character when, and we then see a big impulsive candle to the downside. And these buy to sell wicks are the hidden supply that the price has come up and mitigated, right? So just study the price as I do that right now. Go look for these playouts of and zones of interaction between supply and demand, and where will the supply fail and why will price return to that demand that has caused the failure, or where will it actually return and why did it return to that specific area. Okay, look for these questions and then answer them using the 4 hours as well as 15 minutes. Okay, this is part of case studies, right? And then of course explain either to yourself by words or write the call outs. Okay, now the next step that has nothing to do with like only hard time frame, right? Let's do it. I mean, on the basic example of this one, right? It is really important for you to make case studies on the examples that have actually succeeded. Okay, so we cannot do a bullish case study at this particular level because it has actually failed to bring the price towards our supply right here, specific supply right here, or this one, right? So we don't do case studies in that, all right? So let's do the case study on here. Okay, so we have a good looking demand, right? It was the demand that it didn't do much, but it has swept liquidity above below these lows, and it was the kind of the one that had this as inducement as well. But we had a lot of buying pressure come into the market after this demand has formed. So we may as well get a reaction from that. But in order for us to receive a reaction and a valid consideration before taking buys, we need a 15-minute change of character. All right. And the anticipation at this point now is that we will get a retracement down to this, I mean, up to this supply, right? So now let's get to 15 minutes and then let's look for the possible chalk, right? So in this case, we have tapped into the market, not in the market, shit, into the demand, right? We need 15-minute change of character. At this point, this is our change of character that we want to have. Actually, make it bigger. All right. So let's play the market price. And then what do we do? Well, even now you can see that we haven't succeeded, right? Because this is our high. We haven't broken it, right? We have rather than mitigated the supply, right? So this is a valid sell. Demand supply, right? So that was that thing. Okay. So let's now play the price forward. And as you can see, we have now officially swept this low, right? Which means that now, for some clarity, Uh, we need to, well, ideally, we want to sweep this high, right? Um, but sometimes, just for the risky trade that you take, you may as well take this one if there is a good looking candle. So this is 5 minutes time frame, right? And as you can see, we sweep this high, right? And then our change of character is done right now. So we may as well now be looking for buys, right? But the targets should be according to our higher time frame analysis. The higher time frame analysis says that we need to target this supply, if I'm not wrong. Um, yeah, I think this one, right? So not higher because it will not go to the upside to the moon, right? It doesn't need to because the supply is in control. Right now, we're just in a pullback phase. So that's why we mark out our 5 minute demand in here, right? And then if you want, I do that. Then we can go in 1 minute, right? And you know, the last point, kind of the extreme. Oops. Um, Kind of the extreme one was this point, the buy to sell wicks. So this one is a more refined one, but yeah. Let's go back to 10 minutes and just speed up the price. So we need once again now price to come back into the zone that we have marked out, and it does come back here, right? So now we go on 1 minute, and as you can see, it's bad, but we have already tapped in, right? And we have immediately a change of character. Plus, we have these impulsive breakout of the this range, right? The supply range, which means we can now may as well be looking for some buys as continuation buys, right? And I will not go lower than 1 minute in this video because I get that a lot of I mean the vast majority is actually trading 1 minute. So in this video, I will try to stick with your plan, right? And go with 1 minute continuation models and trades, right? So we now may as well be taking, you know, the trade from the zone stop loss like this. Wait, a little bit lower. Sniper thing. Okay, it's not possible. Okay, whatever. Um, let's go with 1.5 stop loss, right? So we now have set our limit. Play the price. We wait for a price to take us in. Price doesn't want to do that. The price does tags us. It does tag us in, and then let's see where we end up going to. Okay, so at 1 to 4 RR, so here pretty much at this high, I'm going risk free. So let's see. Okay, that's not for. Oh wait, it was 4 pips. 4 RR is going to be here, right? So at this point, I'm going risk free, and I'm already in the great position. So we understand that, you know, okay, now I'm risk free. Now you either take out partials, right? 20% off at 1 to 4, or you just move your stop loss to break even. So yeah, let's then see what we have. Price goes, the price goes, it messes around a bit. It's so freaking. I mean, first of all, let's make it. Let's make it. What did I target? Okay, I'm targeting this supply. So this is a potential, once again, 1 to 27 RR trade. Okay, and let's play the price from 5 minutes, and let's go from there. Um, so we have these. So these are. I will not be deleting this because it takes a lot of time to mark them out. But yeah, these are actually the ranges within the swing points, or the so-called bullish order flow. Um, and you need always to understand what kind of order flow right now prevails in the market. Right now, I mean, clearly you can see that it is bullish, right? Because the anticipation is that we will actually mitigate the supply. So now let's make the price even faster. And I think it's enough. So we have this ranges, right? This is our another, I was about to say 5 minute demand, but I'm not sure. So let's say that it was 5 minute supply zone that we need to receive a reaction from. By reaction, I mean 1 minute change of character plus flip. So in this case, we receive our change of character, we receive our flip. So we may as well now, enter like from here. I don't know where it comes back to. But this is what we do normally when we are backtesting, right? But when we are doing the case studies, um, the whole thing that we should do is this, right? So at this point, I will write valid, that's the wrong language, valid looking demand, and then reasons, swept liquidity, engulfed candle, impulsive push to the upside, and then flipped the supply has inducement. All right. So these are the confluences of my demand, right? Then I'm writing the anticipation or the target in here. Anticipation is anticipation is that we will pull back to this supply. All right. So we have done our part on 4 hours, and we may as well write um, we we need to change order flow from bearish to bullish, and that is our 15-minute chalk. All right. So we do these callouts or annotations on our charts. And then as soon as we have done this, right, we go on 15 minutes, as I've said, right? We then wait for the change of character. In this case, 15 minutes it is a bad looking change of character, but whatever, right? We then analyze the 15-minute change of character. Uh, let's say that, we will assume that it is a 15-minute change of character that is actually good looking on 5 to 10 minutes. But we write the same thing. We have now received 15-minute chalk, right? That means a change in order flow from bearish to bullish, right? So now what I do is I mark out a good looking demand and do the same thing that I have done, right, on 4 hours. I explain why this demand is good looking. This one is 1 minute, it is not good looking on 5 minutes, but this 5 minutes is a good looking because it is um, engulfed. I will write it shortly. Engulfed, swept liquidity, flipped supply, origin of chalk, etc. Right? What do we do then? We have, by the way, etc. I mean, okay, we have inducement as well, whatever. Now the anticipation is that we write that right here. Anticipation. Price will return to this order block. To mitigate it, we need one min chalk to enter. Okay. We may as well, I mean, as you can see, you mark out everything that you see and you explain everything that you see, and then you take the screenshots of the charts, and then I mean, you can post them or in Notion, or you can just save them in your trading view, or you can save them in your computer gallery, like whatever you do, one do that, okay? But you need to explain it to yourself, and you need to always look for the moves that have actually succeeded in their goals, right? And then try to pick the zone that has actually failed, and ask yourself why has it have failed, right? That will help you to find those significant differences that will actually bring you to the point when you are um, consistently know what you need to look for and what you need to be aware of in order to execute the trades successfully, in order not to get lost on the time frames like 15 minutes, 1 minute, whatever, right? So the next thing, we go on our executional time frame. We have tapped in, right? Then you see, like, we have tapped in, we have change of character. You write that, you mark that out. Then what you see? Well, we have this aggressive recovery, or so-called V-shaped recovery. We add that to our confluence. What do we have then? We have this supply that has given a reaction within this little black candle. Then it has failed, right? So you may as well trade from this order block, right? And that will give you even a better stop loss in this case. So like even mine was wrong in here, right? So you do that. You have these lows as inducement, right? You have a further break of structure in here, right? Like you set the target to your supply, and then you just, you know, along the way you look for the entries, the possible ones, right? If you have found one, good, explain it. All right. So in this case, I hope I have explained my thing, right? What you need to do. You don't really need to do that with the replay bar tool as I've done it at first, right? Because that will take much more time than just looking at the already printed price and analyzing it. All right. So you may as well do something. Let's delete all these. Let's no, no. So where was I? Okay, over here. So we have. Oh, okay, so I just for the sake of clarity in the charts. So we can now get to our 4 hours, right? And let's explain what has happened in this demand, right? It failed, right? So there is no point of us getting a case study on bullish price action here, right? What we can do though is study this piece of price action that has broken to the downside. This was the supply, so we do that after a series of supply chain mitigations, right? Um, the price returns back, and the anticipation is that we will break this low because due to our higher time frame expectations and intentions of the price, we understand that this low is weak, therefore it will likely get run, which is why the price has mitigated the supply and then went to the downside. Then you go to 15 minutes, and actually let me, yeah, so we know where to look at. So then on 15 minutes, you need a 15-minute change of character, right? You get it in here, okay? The price supposedly, firstly, doesn't go to your extreme, right? Because this one is extreme, right? But then it comes to that extreme zone. What you need to do then, you explain everything that you see on 15 minutes, and then after it has come to your extreme zone, right, and mitigated, and supply has held, right, you go to 1 minute, and there you do the same thing that I have said, right? You look for all the confluences that are um, confirming the play of that short trade, right? And then you just memorize the price as it is. You take the screenshots with all the explanations and you just save them wherever you want. Okay, so I hope that makes sense um, for you. Okay, because might have been a chaotic video a bit, but yeah, I hope that this video of how to do case studies will actually help you. Okay, and once again, the most important part is that you already do an analysis on the already printed price action. That is really important because you don't really need to focus your attention on the losses or the moves that have failed. You would rather want to see, to memorize, and more importantly, to um, repeat the moves that have actually succeeded and had a follow through to them. Okay, because with some time, like let's say that you have done 30 case studies, you will actually understand that the price is doing one simple thing over and over and over again on all of the time frames. That understanding will be a helper to your trading journey, right? And that will, sorry, and that will be an eye opener, and you know, from that point on, you will actually benefit from it way better, and you will be more confident in your trades. I'm not saying that you will win like 60 or 70% of them, right? Because that's something that, you know, doesn't really depend on your case studies, right? Just the fact that you will get more much needed information than you will do in backtesting, in my opinion, is definitely a fact. Okay, so yeah, I think I will stop waffling for now because I've been waffling for 43 minutes, right? But yeah, I think that's it. And if you find it helpful, please leave the comment down below. I will be really happy to read them out. If even if you didn't like the video, just say what was wrong about it. What didn't like you? Why didn't you like this video? And I don't subscribe, like the video if you want more. And yeah, I think I have some videos planned, but I think I will do one video on explaining either this trade or this one, which was mostly sponsored by this federal open market committee. So yeah, but yeah, I hope you have liked this video. So yeah, enjoy and get better, get that information, get that data. If you're not profitable or consistent yet, just repeat it to yourself that you're not yet consistent and profitable. That will come with much perseverance, dedication, and the most important, as in my opinion, passion about what you're doing. Okay, you need to enjoy this process of refining yourself and getting better. Right. So yeah, this is all for me right now. Thanks for tuning in. Have a good day and peace.